Hi guys, welcome back to the YouTube channel. Make sure you hit the like and subscribe button. Today we're going to be breaking down a trade that I caught on CPI. We're going to go through the entry process and how I caught this trade on CPI. So let's get started. So basically how I went into this price in was we saw that on the Sunday markets open at 6 o'clock New York time, Sunday 6 o'clock. You can see that we had this big bullish momentum riding to the upside, right? Taking all these highs out in price over here, right? So I was just monitoring how this price moved and where I could potentially catch an entry at these levels. So this was markets open, right? This was my first run. This is Sunday going to Monday, right? So as we went into the day, I saw at London session we had a big push to the upside once again, right? Once we had that push to the upside, I was monitoring where I could get in because Monday's opening for me was at at this level over here. So this was Monday's opening, right? So this was our first session, which is London. Then we have New York. Then we have Asia session over here, right? So it's three sessions to the day. So I was monitoring where could I get into this trade, and I was targeting a higher time frame point of interest, which this area up over here is my daily point of interest, right? Because price was still far away from it, right? Because if you see, we've been going bullish this whole way, right? So we've been riding bullish, bullish, bullish once again. So market opened over here, going aggressively bullish, right? So my approach to this trade was I was on the 5 minute chart, right? I was on the 5 minute chart, and at this point of interest, so London session played out at 3 a.m. New York time. London session played out moving higher. So at this point, London presented this high to me, right? It presented this high over here. So we were monitoring this high. We know that it broke structure and it swept liquidity, right? So when price broke that high, I was monitoring these two levels over here. So I was monitoring this level, this low, and I was monitoring this high over here, right? So those were my two levels that I was monitoring since price just liquidated this level, breaking structure over there, right? You can see that the range over here in this pricing, then price breaks structure. So at these lows, there was liquidity laying for me at this point of interest. So same with this low and this high over here, right? So I was monitoring these levels to see where I could get the trade and where's my entry point going to be. So the way we trade is we wait for a liquidity sweep, right? We wait for a liquidity sweep and then we want to get into the trade. That's how we trade on this YouTube channel. Sorry. Right, so when we had this push off, right, pushing down, pushing higher. So I was basically waiting for this area to get tested, right? This area to get tested. I know that there's stop stop loss orders at this low, right? Stop loss orders at that low. So let me just make that a bit bigger. Right, so there was stop loss orders sitting at this low and also at this high in price. at this area in price, because these were our swing structure right now. So this low over here to this high, right? So this was my swing structure in this pricing, right? So I was just waiting for price to give me a tap into this area, sweeping these lows, bullish candle right into the upside. So I was monitoring that area as well to see if price wants to tap into that fair value, right, and move higher, because you see it failed to tap into the fair value. So I wanted to see it tap into the fair value and move higher, right? So as price approached in this area, we can see at this point in price, right, price moved down, price moved back up, testing this high level over here. The insufficiency there pushed price lower, coming to sweep our liquidity. This was at New York's opening. So New York's opening for that Monday, remember the Monday started over here. So Monday started over here, right? So we had this playing out in the London session and then New York's opening taking place over here, right? So New York's opening. So at New York's opening, we had a big dump to the downside, tapping into our low, and we pushed up. When we pushed up, can you see how price presented itself? It moved higher, creating this high, right? And then price came back to this high and tested it. So it left relative equal highs, a double top area, which that's liquidity, right? So that was our liquidity zone that we were monitoring in this pricing over here. So this liquidity confirmed the buy trade, because you can see when price came back down, it swept this low one more time. So most people would think that this is a break of structure, looking for it to go lower, test this level and go lower. Meanwhile, it is a break of structure, but it's also a liquidity sweep too. Then want to ride higher, right? Because you could get stopped out if you want to sell at this point, because there's liquidity at this point. There's this big fair value that New York presented itself, right? So this is also liquidity in this candle, right? Because it was unfair pricing right here. It's a fair value gap. So we were looking to trade back into this fair value gap, taking these liquidity. So when price did that, I was not even worried about this imbalance, right? I was just worried about what price presented over here. It presented a double top and pushed down. So when it pushed down, it gave us a fair value gap candle once again that opened and closed, taking the liquidity, right? Then after taking this low, sweeping these lows, price then moved back up, right? And when it moved back up, this first presented fair value gap that it presented to us over here is a very high probability trade setup. So when price presented this fair value gap, this was where I was looking to get involved into this market, right? So I'll post my entry that I took at this level at the end of the video. So watch through so you can see my entry point. So at this level, when price swept this low and pushed back into this range, right? So from here to here, and it presented this fair value gap. This was where I was looking to take my trade off. You can see price ranged within this area and then it started pushing off. See, it started pushing off, trading to our liquidity highs that we were monitoring. So this was our first TP that was like a one-to-one on our trade, right? So I entered at this 50% of this fair value gap, and my stops would be at this low, because this is a protected low that just swept liquidity. So I'm looking for that low to be a protected low if I want to be more smaller on my stops, I could put my stops underneath here, right? But remember, when you put your stops underneath your price could then test this whole fair value gap and then want to move higher. In this case, it did not test the whole fair value gap. It tested 50% of it. It just wicks lower, but every body candle closure was above the 50%. So in this case, it did not, but in other cases, you could find the candle testing the whole fair value gap and then want to move higher. So you just have to be precise and know risk management on your trade, right? So you could use the fair value gap, this candle low, as your stop loss, or you could just use this low to be safe in price. Use that low, and that was the stop loss, and our first target would be this level over here. You see, it's a one-to-one trade, and we were targeting the fair value gap to get tested again and potentially pushing up to this high because the stop loss orders running at this high. It just swept a level in price over here, our point of interest. So overall, we'll be looking for the trade to right there, right? So that's a 3% trade, which was a good setup, and you can see how price played off. So this was on Monday, right? This happened on Monday of CPI week, right? So I held this trade through to CPI. CPI was on Tuesday. So you can see price then moves higher, right? Move higher, creating this high. So it ranged around here for a bit. You can see, so there were orders created on this market on both sides of the market, right? So there were orders created over here and there were orders created at this level. So you can see price then sweeps the lows and then wants to move higher, right? So basically what it did was take out liquidity to hit our target. This was our first full target on the trade, a 3% on the trade, right? So as price went on, that's how we want to enter a trade. Just the same way price range over here, sweeping these lows, this is where we want to enter the trade in this piece. So we want to break down, this is a 5-minute time frame. I took this entry off this 5-minute fair value gap. We can break it down, but sometimes on the 1-minute time frame, you won't see this. So my time frames for entries is the 5-minute and the 1-minute. The 15-minute just gives me a bigger point of view that I can look at to see if price is going to react in that area or we're looking to go lower or higher in price. So my 15-minute is like my 4-hour time frame. So if I use my 4-hour time frame, I break it down to a 15-minute, then I take the trade on the 5-minute or the 1-minute, right? So we can see that now price hits our target over here. So what did it do at this level, right? It left double top highs at this level. You can see that price didn't fully take the high, right? Instead, it created a double top at the area. So what it done, it just created more orders at this level because people were selling at this level, right? So it just created more stop loss orders for me to go and take. So this low as well that pushed up is stop loss orders at this low, right? So I was monitoring this low over here and that high that just created this double tops over here. So that's liquidity, right? And you can also see that we have this area in price that was a break of structure at this level, sweeping this liquidity. That's our break of structure. So it was supply area over here that we tested. Most would have sold at this level thinking it was going lower, but then price then moves higher. So you can see now in this flip zone, so it's the supply area at first that flipped, broke through, then it became a demand area. You can see at this level, price failed to tap into our demand level, right? So now as price played on, we are monitoring this low and this high to see which one is going to get taken at first. So you can see price rejected these highs. It ranged around here for a bit, dropped, pulled back at these levels. It's creating more equal highs, right? So it's creating more equal highs at this level over here in price. So it creating more liquidity for us to then go and ride later on. So these are liquidity points as well as here, this low that we spoke about. So price moved. So it's still Monday, it's 9 o'clock. So price is here at 9 o'clock, right? As we moved on into the day. So now Tuesday opened. Tuesday opened there. So as we went on into the day, you can see that this was Tuesday's market open, right? Testing into this flip zone that we're looking at. You can see we tap the midpoint and we push off. London session opens, and London session ranges for a bit, sweeping all these lows in between, and then overall we end up catching a big push off, right? So it was a bit choppy in this area. We do notice that we are creating liquidity at this area, so price could come back in, sweep this area out, right? So you see price moves up. This was CPI opening at 8:30. CPI opened, taking our high that we were looking at the liquidity sitting at. Price took this level over here, and then New York's opening happened at this pricing over here, right? You can see from there, I just held this trade that we took on that Monday to CPI on Tuesday, and I was targeting my daily fair value gap up here. You can see how price moves beautifully to the upside, created liquidity at this point, at the lows as well, and then eventually hitting our TP. So that's how we do trade the trade. You see CPI entry pushed off from Monday. I waited for a liquidity sweep. First presented fair value gap. I took my entry off there. Then this flip zone over here would have been my Tuesday's entry, which I did not enter because you can see at this point we had a massive drawdown in the trade, bringing the trade back to a 0.6% trade. So I did not enter, I was just holding these trades, and then we ended up running up into our daily fair value gap that we were targeting. We swept these lows over here, and that's what pushed price higher. So you can see it's almost a 10%, but this is with a big stop with 70 pips. Most likely would have had my stop underneath the fair value gap candle with a 20 pip stop loss. That's perfect to take a trade, and you can see the risk to reward is crazy. 32% risk to reward, and we made a 700 pip target at this level. So that was my CPI entry over there. That's how we got CPI trade for this recent month of May. So yes, that's how we trade. And let me show you a bonus tip for this week, a bonus trade for this week. Right, so now this is this week's pricing. Right, this is a bonus trade for this week. So you can see price tapped into our daily fair value gap, and it's creating liquidity at this daily fair value gap. We have double tops, so I know that price is going to ride higher. We've been speaking about this in our last videos, so just go back and watch them. So you can see now price came down, sweeping these lows, so price is basically moving like this at this moment, right? And then we have this big push up. So most likely people are looking for a break of structure at this level and looking to sell off at this level, right? Which price swept liquidity, so it's looking to go higher to take the next point of liquidity. So basically what I'm looking at is, you can see Sunday's opening. So let's go back down the time frame. Right, Sunday's opening over here at 6 o'clock. Price moved aggressively to the upside. So this was a supply area over here, which price came to it, ranged around it and breaking through the supply area. So it's a flip area at this point. But you can see that all these orders in here, it's liquidity. That's liquidity. So I want to see price getting swept and then look for that run back up. So yeah, that's what we'll be looking at. This is a small breakdown of what I see happening, that we could potentially test this flip area over here. This area again, keeping all of that liquidity out, because this is Monday's opening low, Monday's opening high, market is closed right now. So we're waiting to see what it does on Tuesday's opening. We look for a liquidity sweep and then we want to ride higher. So that will be my trade setup for this week. I want to get in after a liquidity sweep that's going to happen here. Looking at a point of interest, I found this area on the 1 minute, on the 5 minute. So I'm monitoring this area. This would be my extreme area where I want to get in. Stops at this low of the fair value, because we cannot use that. That's 172 put. That's too much. So manage it here and rise all the way up to the liquidity, where 16% risk to reward. So yeah, thank you guys for staying tuned. Make sure to hit the like and subscribe button and check the previous videos if you haven't, because we break down every single thing that I just spoke about now. See you guys.